from the heart of where innovation, money, and power collide in Silicon Valley and beyond. This is Bloomberg Technology with Emily Chang.
I'm Emily Chang in San Francisco, and this is Bloomberg Technology. Coming up in the next hour, Bitcoin holding steady over $48,000 as speculation about who will win. The race to launch the first Bitcoin ETF looms large. We'll break down the crypto action ahead of what will likely be a busy weekend of trading. Plus, Apple delays its return to work to 2022 as cases, hospitalizations, even deaths due to Delta rise. How much longer can the working world stand on edge? We'll discuss. And Tesla robo-taxis have yet to hit the roads, but Elon Musk unveiled plans for yet another robot, not on wheels, but legs. We'll show you the humanoid bot he claims is the future. We'll get to that in a moment, but first, let's see how the markets ended this Friday with our own Kriti Gupta. Kriti, what a week it was.
Well, Emily, last Friday, we were at record highs. This Friday, clearly a risk-on session if the red on the screen didn't tell you. Risk assets really taking a dive here, whether it's stock, whether it's big tech, whether it's commodities, which you really saw the brunt of the hit. A lot of this coming on Delta variant concerns and, of course, the potential that the Fed is going to taper by the end of the year. So, of course, from a macro perspective, this is crucial. But the story that really caught my eye is palladium. Now, Emily, don't glaze over, don't zone out, because palladium has been on a 5-day decline. Why am I talking about this on a tech show? It has to do with a chip shortage, which is actually making automakers less in demand for palladium and therefore making it the worst streak for this commodity since all the way in March 2020. But that, of course, is what has happened this week. Let's spin it forward to what happened next week with, of course, the FOMC. That's going to be the crucial piece for any macro investor, whether you're a stock investor, whether you're a bond investor. What is Chairman Powell going to say about tapering? Of course, we're going to have live coverage of Jackson Hole, which, of course, is now a virtual symposium live at 10 a.m. on Friday. That's what I'm watching on the macro front. Ed, what are you watching?
I love that premium palladium content because I'm looking at chip makers as well, specifically Nvidia. We've been tracking this stock all week. Up 5% Friday, biggest one-day gain since April, despite that increased regulatory scrutiny in the UK you'll talk about later in the show. Investors clearly not that concerned. Apple up 1%, delaying its return to the office until January, but also reinstated at Philips Securities with a price target of $187 per share. Amazon had a late charge Friday, up 0.4%, had been negative for most of the session. But if you look over recent days, it's actually just stemmed what has been some pretty significant declines. Amazon's really become the poster child for this unwinding of the stay-at-home trade. A lot of questions now going forward. We look next to the next quarter of earnings about what the future holds for Amazon. Also, focusing on those crypto-related stocks, you have Bitcoin trading at its highest level since May. As you said, Emily, interest around the prospects for Bitcoin ETFs intensifying, but those crypto-related stocks making outsized gains on Friday as well. Are we back to the status quo with this cycle? Bitcoin, crypto-related stocks? I don't know. Back to you.
All right. And of course, it's going to be a busy weekend. We're going to talk about that in a moment. But first, Apple has announced it is delaying its return to office for corporate employees from October to January because of a continuing surge in COVID cases. The iPhone maker, just one of a number of tech companies pushing back the reopening timeline to 2022. Amazon, Facebook, and Lyft have all done the same. This also highlights how business hubs around the world are reacting differently to continued pandemic concerns. Here in San Francisco, activity in the workplace down 60% compared to pre-pandemic levels. In New York, it's down 55%. For more on Apple's announcement, our very own Mark Gurman. Lots changing here, and Apple reacting yet again, pushing back that timeline yet again. Mark, what factored into this?
Yeah, so on Thursday night, Deirdre O'Brien, Apple's head of human resources and retail, sent an email to all corporate employees saying they are pushing back the return, which was previously planned after a delay to October, now to at some point in January 2022. She warned this is not confirmed, but she wanted to let employees know that it wouldn't be any sooner than January. The company said it's going to send a follow-up note to employees closer to reconfirm that timeline, which could, of course, shift again. And they're blaming the Delta variant and the ongoing COVID surges for this. Obviously, we all probably know lots of vaccinated people at this point that are still catching the virus, obviously with fewer symptoms than unvaccinated people, but it's clearly still an issue. And now we're still several months away from a full return for Apple and those other companies like Amazon and Lyft that you mentioned.
And when Apple employees do return, Apple has been pretty specific and fairly innovative in how they've created this plan. They say employees need to be in the office Monday, Tuesday, and Thursday. Stores will remain open. Offices will remain open, though. Until then, they're not actually closing anything.
Right. This January timeline is a deadline, so to speak, right? There are plenty of Apple employees already back in the office. There have been over the course of the pandemic, particularly in the last 6 months or so. This is basically a drop dead deadline for you to come back to the office using that arrangement that you noted, which is you have to be in the office Mondays, Tuesdays, and Thursdays, but you can work remote on Wednesdays and Fridays. Personally, I don't really think this arrangement's going to work. I think with people having been out of the office for 2 years, it's probably going to be very difficult to come back into the office and make that adjustment. So I really think Apple had to go more with an all or nothing approach. You have to be in either 5 days a week, or we're going to go fully remote. And I think we're likely to see more changes to that approach as January and even February approaches.
Something a lot of companies are dealing with. Bloomberg's Mark Gurman, thanks so much for that update. Meantime, another story we're following, Nvidia's planned $40 billion takeover of the chipmaker ARM, facing a new hurdle. UK regulators have called for a longer investigation into antitrust concerns, potentially pushing back a ceiling of that deal by at least a month. For more on this, I'm joined by Bloomberg's Ian King. Ian, how significant a development is this?
Yeah, I mean, we've said all along, Emily, you and I have discussed this several times. This was always going to be a tough regulatory battle to get this one through. What was significant today was that the UK authorities came out and said, look, you've offered these concessions, you've offered to sort of make the deal more palatable from our point of view in these ways. We don't like it. We want to have another more detailed look at this. So that, it was kind of expected, but it was still a fairly solid pushback, and I think it underlines that concern that everybody has, which is how does this navigate this complicated map around the world of all of these competing interests that are all looking at ARM in a different way.
Still, Nvidia shares closed up today, more than 5%, when it's not just UK regulators, but also industry. Others in the chip industry don't want this deal to happen. So why are shares up?
Yeah, it's a good question. I mean, Nvidia, as you know, reported earnings this week, very, very strong, living up to the promise. I mean, it's a company that's, extremely highly valued by investors, trading at something like 70 times. Earnings were good enough. Jensen Huang fulfilled the promises that he said he would. We're seeing this meteoric growth. But at the same time, in the same release, he puts out there, he says, oh, by the way, yeah, this is the ARM deal is taking longer than we thought. Some regulators are responding to this slower than we'd hoped. And guess what? Yeah, some of its customers don't even like this.
So, Ian, you've been covering the chip industry for 20 years. I mean, what's your sense of how likely this deal is to happen?
I mean, all I can tell you is Nvidia remain extremely confident. They believe they have, the magic formula. But frankly, investors don't care, as we saw today. This isn't something that they're factoring into Nvidia's future. They're saying, look, we believe that this is a company that can be successful with or without ARM. And indeed, why doesn't Nvidia just take that $40–50 billion that are going to go into this transaction and invest it in chips using technology that can just license from ARM anyway? So that's kind of the prognosis. I mean, it's going to take a long time till we get through this regulatory process, so it's really hard to see it progressing smoothly. You can definitely say that.
All right, well, we'll be following your reporting until we get more clarity. Bloomberg's Ian King, thanks a lot. Coming up, Bitcoin hits a 3-month high. After the break, we're going to hear from Bitwise CIO Matt Hogan, where he thinks it's going next. This is Bloomberg.
Probably better to be agnostic. The reality is it's up to the software engineers and the creators to actually create platforms that enable things that are actually usable. And for me, it's just, I can't look at DeFi, I can't look at NFTs, and I frankly can't look at the stream of really smart software engineers who come into our offices every day and say that, you know, Ethereum isn't the platform to sort of focus on and to beat right now.
Gary Tan there, one of the earliest investors in Coinbase, sharing his opinions on the Bitcoin versus Ethereum debate. Meantime, as we head on in the show, Bitcoin hit a 3-month high Friday, helping advance cryptocurrency exposed companies. Joining me now, Matt Hogan, Chief Investment Officer at Bitwise Asset Management. It's a good day in your parts. Matt, where do you think the price is going next?
I'm very excited about what's happening in crypto prices today, and I think the future is looking bright. We're seeing two primary drivers, Emily. We're seeing significant progress on the regulatory side, probably the most important thing that's happening in crypto right now, as well as new applications, NFTs, DeFi booming, and adding to a story that was already very positive around Bitcoin. So I'm very positive today, and we're the outlook for the rest of the year.
So the race is on to launch the first Bitcoin ETF. Gary Gensler, chair of the SEC, has indicated he is open to this. Who wins?
Investors are going to win. That's the answer. Investors have been looking for a Bitcoin ETF for a long time. It's going to make it easier for financial advisors to allocate into the space. It seems like the SEC is pushing the industry to launch a Bitcoin futures ETF. That's good. It's not as good as a physical ETF, but I still think it will unlock the ability for many investors to access the space. If you're asking me, I think the SEC is likely to allow a number of these products to come to market, and you'll see the same kind of competition among Bitcoin futures ETFs as you do among the various gold ETFs that exist out there. And again, the winner there will be investors. More choices, lower cost, easier access. I think it's going to be a milestone moment for the crypto industry at large and impact not just Bitcoin, but other assets as well.
Meantime, I interviewed the creator of Ethereum, Vitalik Buterin, earlier this week. We debated a lot of things, Bitcoin versus Ethereum, Bitcoin versus the dollar. Take a listen to a portion of what he had to say.
Replacing the dollar completely is unlikely, just because like there's things that the dollar provides, like price stability, for example, that Bitcoin is not going to provide. Like I think even in a theoretical world where the US dollar collapses, like even then, I think Bitcoin is not going to be able to provide the level of like stability that users and businesses expect to be able to set prices in. And in that kind of world, look, we would need something else. Like it could be decentralized stable coins, it could be something else, but we'll see. But at the same time, I think cryptocurrency can still have a very powerful and important role alongside existing currencies.
Matt, do you think Bitcoin replaces the dollar? He doesn't seem to think so.
I don't think Bitcoin replaces the dollar anytime soon, and I'm not sure it ever does. I also don't think it needs to from an investment perspective. Simply looked at as digital gold, a way to store money outside of the current fiat system, outside of the risk of inflation. That is a huge market that can justify a much higher price in Bitcoin alone. So I'm actually aligned with Vitalik. I think the likelihood that it replaces the dollar, or the likelihood that you and I buy our coffee in Bitcoin in the next few years, is very low. But despite that, I still think it has significant appreciation potential just in that store of value use case.
What about Bitcoin versus Ethereum? You can imagine Vitalik's answer to that. Gary Tan also seeming to agree that Ethereum is a better bet long term. I know it's a good day for Bitcoin, but realistically, who's going to win?
Oh, I think they're both going to win. That's the answer. I think Bitcoin is moving into the digital gold space. That's where its value is going to be created. And again, I think that's a multi-trillion-dollar market potential. Ethereum is one of the most exciting assets in crypto right now. It is the infrastructure that's powering, or that stands behind DeFi, that stands behind NFTs. It has enormous momentum from a developer capacity, and you see new projects being built on Ethereum today. It also has, new and improved economics. I do think you're going to see significant institutional investment into Ethereum. Ultimately, it may be chasing after a bigger market than the store of value market, but whether it will penetrate that fully remains to be seen. So I like holding them both. I think investors are not holding crypto broadly if they're only in Bitcoin. They need Ethereum and potentially other assets as well.
Meantime, quickly, both Vitalik and Gary Tan threw some cold water on Jack Dorsey's DeFi plans. You recently announced a new DeFi fund. What are you seeing happen here? What do investors want, and where is it going?
DeFi is one of the most exciting areas of crypto. You can think of it as using software to disrupt traditional financial services. I think you and I and most of our viewers would agree financial services need disruption, and DeFi is going to be how it does it. What we've seen in DeFi so far for things like Uniswap and Aave, and we just launched funds that provide exposure to Uniswap and Aave individually, is some exciting proof of concepts. Uniswap competing with Coinbase to provide crypto brokerage. Aave emerging as almost the prime broker of the crypto community. They've gone from 0 to 1. What we need to watch for now is how regulation develops. That will determine whether they can go from 1 to 100 and penetrate the traditional financial space.
All right, Matt Hogan, we'll be watching for that. Bitwise Asset Management CIO. Thanks so much for stopping by. And a reminder, you can catch more of my conversation with Ethereum creator Vitalik Buterin on Bloomberg Studio 1.0 across the weekend right here on Bloomberg Television. Check your local guides for details. You can also listen to the Studio 1.0 podcast when you're on the go. Coming up, Foot Locker stock surging as the sneaker retailer reported better than expected second quarter results. We're going to dive into the numbers and what it means for the company with the CEO, Richard Johnson, next. Meantime, electric truck maker XOs made its NASDAQ debut, ending the day down 15%. The listing came about through a merger with the blank check company NextGen Acquisition, the deal valuing the combined entity $2 billion. XO's customers include UPS, armored car service company Loomis, and transportation company Lone Star. This is Bloomberg. Locker shares jumped Friday after second quarter profit blew past expectations. The favorable numbers reflect an increase in customer demand for athletic footwear and workout apparel as the lockdown eases. Foot Locker CEO Richard Johnson with us now in this week's Retail Transform. And Richard, we've lived in sneakers for the last 18 months, more so than usual, but less people are strolling into Foot Locker at the mall like I did as a kid to pick them out. More and more folks are buying these direct to consumer. How is that factoring into your vision for the future of the company?
Well, Emily, thanks for having me. We had a really great quarter. And, one of the things that we talked about this morning was actually that traffic was up in our stores versus a year ago. Now, a year ago, stores were just starting to reopen, but, we're a digital first company. We want to connect with the consumer on all the digital channels, all the social channels, and where the customer decides to shop, whether they click buy on the app or the website, or they come into the stores. I'm really channel agnostic. The biggest part for us is to make sure that we create that deep engagement with our consumer from a digital perspective. So, the malls are continuing to try to redefine themselves. We continue to pivot out of some malls and into some more important street spaces for us. And we've got a lot of strategy involved with timing the right connection to the community. So building more community-based stores across the U.S. and across the markets that we operate in.
Now, brands are also going direct to consumer, including Nike. Nike, however, has chosen Foot Locker as a strategic partner. How important is that relationship, and where do you see that going?
Well, I think it's critically important, right? Nike brings a lot of heat to the marketplace. They create great sneakers. They create great stories. They're a great technology company in terms of advancing, both fabrics and apparel and footwear composites that can really create the next generation of sneakers. And you see it on the track and field, you see it on the road races, et cetera. That will all be commercializable over time. So the relationship with Nike is critical to us. They do a great job in the industry, and we're proud to be their partner and proud to sell a lot of Nike products.
Sneakers are also becoming collectible items. I spoke to the CEO of StockX yesterday, which of course is direct to consumer, making the argument that people are investing in apparel, in sneakers as a collectible instead of investing in stocks. Take a listen to this from Scott Cutler.
This next generation consumer is changing their thinking about what it means to invest today. They're looking at physical assets that are actually more like investment assets. So they're seeking out culturally relevant items in the physical world, and they're making investment decisions around that. That's certainly a new trend.
How big do you think this sneaker collectible trend is, and does it fit into what you're trying to do?
Well, sure it does, right? I mean, we believe that the sneaker ecosystem is massive, right? Kids certainly do look at investing in sneakers, and we operate in an industry that's got a bit of a constrained supply, which creates the opportunity to invest and see prices and things go up. We made a significant investment in GOAT, which is a competitor of StockX. We made a minority investment back in 2019 because we believe that the sneaker ecosystem, we take and focus on the primary market where the kids buy the shoes initially and how they choose to use them, whether they use them as an investment vehicle, as was just referenced, or they put them on their feet and wear them. Again, that is a consumer's choice, but we believe that the strong sneaker ecosystem, it will continue to fuel the aftermarket and the secondary market and the investment thought around sneakers and apparel pieces.
You also just made a couple of big acquisitions, footwear chains in North America, Asia Pacific. You mentioned supply chain issues, though. Curious what you're seeing there and how you expect that to play out, how long you expect supply chain issues to last.
Well, we've been battling supply chain issues all through COVID, right? And our team has done a great job of maneuvering around it. The ports have slowed down a bit on the West Coast. We know that. We're working hard to get things to the port quicker and from the port to our stores as fast as we can, or to our warehouse for our digital sales. The lockdown in Vietnam will impact a lot of our suppliers. We're working with them to understand what the flow of goods will be. And, again, it's just the gift of COVID that keeps giving, and we will continue to figure out how to maneuver around it.
Right. Okay. Richard Johnson, CEO of Foot Locker, thanks so much for joining us, sharing that perspective. All right, coming up, dancing AI-powered robots, a supercomputer, and super chip. Plus, a big push to hire the world's best and brightest computer engineering talent. Any guess what company we're talking about? All to be revealed next. This is Bloomberg. You're looking at pictures there from Tesla's inaugural AI Day event, and might not be exactly what you thought you'd see. The promise of an AI-powered robot, cutting-edge autonomous driving AI, and brand new semiconductor technology for Tesla's Dojo supercomputer. Lots to talk about here. Here to break it all down, Bloomberg's Ed Ludlow. Ed, what on earth was that? Are we still on Earth?
That, as you can quite clearly see, was not a robot. That was a human in a robot suit. But Elon Musk did outline the specifics of the robot. A prototype could come next year. The idea is to take the underlying technology used for full self-driving, the camera-based system that detects the world around the vehicle, and the compute, the artificial intelligence that helps it decide how to react, and put it in a robot that can do tasks like lifting heavy objects, even go to the grocery store for you. But this was a recruitment event, right? This was about demonstrating the progress that Tesla's made in AI. And the crux of that, the substance of it, was a new chip, which Tesla basically says is as good as or better than most graphics chips, and they could even sell it to others. This is what he had to say.
I'm not sure how to pay for it if it's fully open sourced. Yeah, unless people want to work for free. But I should say that this is, if other car companies want to license it and use it in their cars, that would be cool. This is not intended to be just limited to Tesla cars.
So this semiconductor designed in-house, expensive to make, as Elon Musk said, but it marks a real step forwards towards Dojo, the supercomputer that's going to be used to train the neural network that will eventually power full self-driving. The thing is, we didn't get any more info beyond that. We don't know when full self-driving will be real out in the wild. And investors kind of left with some questions about that going forward, Em.
All right, Ed, hang on, because we're going to talk about this much more. I want to bring in Wedbush analyst Dan Ives for his thoughts. Dan, obviously, you've seen a lot of these Tesla events. The AI-powered robot, which is not yet a robot, is Elon Musk for real?
Look, I mean, it continues to be a bit of that sci-fi movie. And I think it's something where, as Ed talked about, it's great to show the vision, the technology, and no one argues in terms of what Musk has created and going forward. But I believe these things start to become a sideshow and a bit of almost a frustration for investors that are really focused on the arms race and electric vehicle, chip shortage, capacity, and a lot of the issues that's, a lot of that bloom's come off the rose, at least over the last, call it 3 to 4 months for Tesla investors. So I think things like this are great to show where they're going, but ultimately I view them as, a bit of almost a sci-fi distraction.
Dan, you got a $1,000 price target on the stock. As Emily said, you've seen these events before. I'm thinking as well about Elon Musk's comments 2019 about 1 million robo-taxis, by the following year. That never happened. Is this just the latest project that we're going to be waiting infinitely for?
I think that's part of at least our frustration. Remember, we're bullish on Tesla because of the green tidal wave, because of electric vehicles, because of the China story. When I looked at even going back to robo-taxis, which we were pretty critical of, and even last night, I think what this does, it just creates these sort of vision and almost targets that ultimately they've not been able to hit. It's a distraction, becomes overhang in the story. And I think what it does, it takes away from the investment thesis. Because right now, as an investor, you want them to be focusing on the core electric vehicle vision, and in terms of some, especially in China, smoothing out some of those issues. And this is obviously a week that they've had to probe on the safety issues. So it's hard to sort of, the elephant in the room. I mean, you talk about FSD. I mean, here it is, they have a full-fledged probe going on. So I think it's the timing of the event, and I think some of the, especially on the bot issue, I think that was something that was ultimately unnecessary.
So let's take a listen to a little bit more of what Elon had to say, because he says the bot is real. Take a listen to more of what happened last evening.
The Tesla bot will be real. But basically, if you think about what we're doing right now with the cars, Tesla is arguably the world's biggest robotics company because our cars are like semi-sentient robots on wheels. It kind of makes sense to put that onto a humanoid form. And we're also quite good at sensors and batteries and actuators. So we think we'll probably have a prototype sometime next year.
Dan, why announce it at all if he doesn't have a prototype today?
Well, that's our issue. I mean, think about Apple and what they've done in Cupertino. If you look at the last 15 years and everything they've developed, they talk about it once it's launched. How many things go on in the labs at Cupertino that never see the light of day? That's what core technology companies do. To start to do this sort of release it, have no prototype, all it does, it sets up expectations. And from a technology perspective, the Tesla loyalists, they're going to love this. But investors in the street, they don't want to see this. They want to ultimately see this when it's, fully done and really it could actually go GA. Because just like Ed was talking about, when you look at robo-taxis and now this, it starts to become a little bit of a frustration, almost a boy that cried wolf type frustration in terms of some of these visions that at least so far have not come to fruition.
And here's what was not mentioned at all is the concerns around full self-driving, the NHTSA investigation that is ongoing. Ed, right? These are real concerns.
Yeah, look, credit where credit is due. Tesla went into incredible detail over 2 hours about the progress it's making, training its artificial intelligence technology. What was difficult to understand is how all of this relates to the original mission statement for Tesla, which is to accelerate the transition to sustainable energy, right, Dan? So, this is what I'm left asking. When do we start to see full self-driving out in the real world? And how does it even fit in with what we know Tesla to be, the maker of battery electric vehicles, the maker of energy storage solution?
Yeah, and I think right now, that's latter part of the decade. And even when you look at level 4, sort of hitting that, that's right now that's way on the horizon. look at the issues to get there that we're seeing today, just from some of the safety. This is going to be a choppy road. But on your point, reason we're bullish on, the reason you own Tesla is because of the electric vehicle, the green tidal wave, $5 trillion over the next decade. The more they focus on some of these issues, sideshows, robotics, whatever you want to call it, remember, you have companies like NIO, Xpeng in China. Look what's happened in Europe, where you have almost 100 OEMs going after EVs. Look at GM, look at Ford. That's the problem right now, is that you don't want to see them take their eye off the ball as we're just going into this green tidal wave. And that's the frustration for investors that I've heard from when you watch last night.
So let's talk about the ball, the D1 chip. How important was that?
Look, I think it's similar as you've seen with Apple. I mean, more and more you're going to see that as a theme. Control over the ecosystem. That was important in terms of chip. I think that can be important for margins. That can be from a supply perspective, and just more control of its ecosystem. That's part of the flywheel. So that's something, in my opinion, that's probably the most important announcement in terms of the chip, because that's something that could really have an impact. Look what we've seen with Apple. I mean, the M1 chip, in my opinion, is probably one of the most underappreciated innovations come out of Cupertino in the last 5 years.
Yeah, so Tesla said that this chip, the D1 chip, has the compute power to rival the best graphics chips, that it goes into this training tile, a system of other semiconductors, controllers, and that what they're doing right now is that they are in prototype phase, but the Dojo comes online by the end of 2022. So we definitely want to continue to focus and track Tesla's progress on computer engineering, on artificial intelligence, because there was evidence on show that they've made progress.
All right, well, Elon Musk certainly set a few new deadlines for himself, which we will be checking. Wedbush analyst Dan Ives and our very own Ed Ludlow. Thank you both. Coming up, while some of us learned to bake, others played board games, quite a few people actually spent the months in lockdown learning another language. After the break, we're going to speak to the CEO and co-founder of Duolingo about the platform's popularity amidst the pandemic, plus their third annual DuoCon conference next. This is Bloomberg. The world's largest auto factory is being hit by the global chip shortage. Volkswagen's main plant in Wolfsburg, Germany, will operate only its early shift in the week following the summer break because it can't get enough of the chips. Meantime, Volkswagen's Audi brand is extending its quote-unquote summer break by 1 week at its 2 factories in Germany. Shares of General Motors fell in late trading after the company expanded its recall of its Chevy Bolt EV. GM will widen its program to replace defective battery modules to include cars built in 2019 and all the 2020 to 22 model year units, as well as the chunkier Bolt EUV. That means an additional $1 billion of costs for the company. Language learning apps saw a surge in popularity during periods of lockdown as people made the most of their time at home to learn new skills. One of those apps is Duolingo. It offers over 100 courses across 40 distinct languages, and there's more in the pipeline, as the company announced at its annual DuoCon event. Joining me now, Duolingo CEO Louis von Ahn. Louis, thank you so much for joining us. You just wrapped DuoCon, and during your keynote, you shared a really impressive statistic. Take a quick listen.
People who study on Duolingo learn the equivalent of people who had taken 4 university semesters of either French or Spanish.
That's pretty incredible as somebody who took many semesters of French and doesn't have a lot to show for it. But what is it about the app that makes the experience so sticky and so successful?
Yeah, so, well, thank you, and thank you for having me. So, there's a few things. I mean, we really try to make the app be free, fun, and effective. For one, it's free to learn a language on Duolingo. That means that because of that, we have literally millions and millions of people using us. Because we have so many people using us, we use the data from all these millions of people to improve how well we teach. And because of that, it becomes very effective. Like I said in my keynote, if you reach about halfway down the course of learning French or Spanish, you learn the equivalent of 4 university semesters of either French or Spanish, which we're very proud of.
Talk to us about the trends you saw during the pandemic in terms of growth and retention, because I guess while some people were baking sourdough bread, others were learning new languages, which sounds very productive.
Yeah, I mean, we definitely got increased demand during the pandemic. Now, one thing that we want to tell people about our company, we've been growing steadily since we launched about 10 years ago. And the pandemic did increase our growth, but it wasn't like it quadrupled it or anything. We did see people spend more time. We saw people learn new languages, significantly more Asian languages. There's a growth in learning Asian languages of recent, so we saw that. And of course, depending on the country, I mean, in the UK, for example, we saw a lot of people learning Welsh. So it's just, you saw different things happen in different countries.
Now, you're adding a number of new languages to the platform, including some endangered languages. And at Duocon, you spoke with Trevor Noah, who, of course, is the host of The Daily Show, who speaks some of these languages that are in danger of disappearing, that you're now bringing on to the platform. Tell us about that.
Yeah, we're very happy. We just announced we're going to add Zulu and Xhosa. These are South African languages, both of which are spoken, well, mainly Zulu, spoken by Trevor Noah. And we're very happy to be able to do that. We're also adding Haitian Creole and Maori, and also English for Tagalog speakers. So every year we're adding more and more languages. We have some endangered languages because we really think that's a good thing for the world. By the way, with these smaller languages, our scale is so large with Duolingo that whenever we add one of these smaller languages, we actually can dip them from not being endangered from being endangered to not being endangered. So I'll give you an example. With Irish, which is a relatively small language, there are 94,000 native speakers of Irish, but we have about 1 million people learning Irish on Duolingo. So we can really multiply the number of speakers by a factor of 10. And so this is what happens when we add one of these smaller languages to Duolingo. It can really change its course.
Meantime, the education technology landscape in China is changing dramatically. I believe Duolingo was pulled from some Chinese app stores. What's the status of that?
Yeah, well, so we for some of the app stores, Duolingo is, you cannot download it from those app stores. The good news is that our existing users, people who still have the app, can fully use it. So we haven't seen a major drop in our daily active use in China. We're seeing a drop in new users, but you can't download it from all the app stores. So that's that. We believe that this is temporary. We believe that we're going to be able to get back on the app stores. And the other thing to say is China's a very important market for us, but mainly because of its potential. Right now, China still, it only represents about 1.5% of our revenue. So it's a small market today, but we believe it has a lot of potential. But it's a situation we're watching very closely.
Quickly, you recently went public. You started off with a free model, added some subscription-based services. What's the plan for the business now that you're a public company? Quickly.
Well, the plan is to continue growing. I mean, the main things that we work on are making Duolingo more effective, making it more engaging. So, one of the most important things about Duolingo is making sure that people really like learning a language. So we spend a lot of time making it more engaging and also making it teach better. So those are big plans. And then the other thing is we're starting to expand outside of language learning. We last year launched an app to teach literacy called Duolingo ABC. That's early childhood literacy. And we are working on an app to teach elementary school math, which hopefully we're going to be able to launch next year.
All right. Louis Van Ahn, CEO of Duolingo, thanks so much for sharing all of that with us. Appreciate it. All right, coming up, as wildfires continue to rage across most of the western United States, we're going to have a special report on how to keep safe from the smoke spreading across the country and beyond. This is Bloomberg. Devastating scenes as wildfires continue to rage across the western United States and Canada. Here in California, there are 12 major blazes burning and more than 10,000 firefighters mobilized to get them under control. These infernos are part of a dramatic wildfire season spanning the North Hemisphere, where smoke has even reached the North Pole. This is a sign you don't need to be too close to the flames to feel the effects. Bloomberg Quick Takes Matt Albani takes a look at the tools being used to keep everyone safe.
While the raging wildfires this year may stay concentrated in the western United States, the impact reaches nationwide. One of the major side effects not only seen, but felt as well, has been smoke pollution's decrease of air quality, all the way from California to New York City.
I mean, people all over the world, in parts of North America, Europe, Asia, have experienced in the last month. Wildfire smoke is a really noxious mix. It's gas, it's particle pollution, and it can inflict a range of health problems, ranging from coughing and headaches to pretty serious stuff like an elevated risk of heart attack. In fact, we know that the lung irritation and immune responses triggered by smoke likely made the pandemic worse last year. There was a recent study that estimated there would have been nearly 20,000 fewer COVID-19 cases if not for the smoke from 2020's record-breaking wildfires here in the US.
Climate scientists are predicting these patterns to become more frequent. As the problem exacerbates air quality throughout the US, keeping track has now become a priority for people nationwide.
For decades, the EPA's Air Quality Index, aka the AQI, which listeners, viewers have probably heard of before, has really been the gold standard for communicating about potentially harmful smog and particulates for people who live in the United States and government agencies. And you can actually go to an online platform called Air Now that the EPA maintains and enter in any location to get a color-coded, targeted AQI reading. And that is based on thousands of monitors spread across individual sites all over the country that analyze for different kinds of air pollution.
But businesses are looking to enter the indexing space as well. Take Purple Air, for example. Its air index devices, which range from $250 to $200, are aiming to build their network throughout people's homes. In the past, these types of devices would cost over $1,000.
Advances in consumer-grade technology have absolutely democratized air quality monitoring in the last few years. There's a number of companies out there, but the most popular one is called Purple Air, and they measure fine particle pollution levels as well as AQI. And you can buy them and place them at any location. Some are made for indoors, some are made for outdoors, and your readings, if you so choose, can be fed into this real-time global map that draws from more than 20,000 of these sensors globally, many of them positioned in people's backyards. And in terms of how they differ from that EPA index, the EPA index is consistently standardized for accuracy. So when you go there, you know you're kind of getting the most accurate reading possible. But Purple Air's map is updated in real time and can really give you a more hyper-local view of your air quality conditions, whereas those EPA monitors are more dispersed geographically. But if you have a Purple Air monitor, or even if you don't, but just go onto their website, which is accessible for anybody, and kind of zoom into your area, you can see that, okay, air quality conditions, maybe 10 miles away from me are in the, yellow or perhaps even orange tier. And that's kind of where we get into some, health concerns, but perhaps the air immediately around me, in my home, in my immediate neighborhood is better than that. And so I can feel safer going outside to take a walk, wash my car, do whatever I need to do without worrying too much about the impacts on my health. So I think that's a big reason to kind of seek out that really hyper-local real-time index that these consumer-grade sensors can supply.
As the issue is expected to grow, having the right tools and understanding is the first step to make sure that you can stay safe.
I mean, I think, the fact that we're even having this conversation, right, the vernacular around AQI is absolutely becoming more commonly understood and commonly sought after. I mean, I live in California, which is currently on track for another record-breaking wildfire season after 2020's record-breaking wildfire season. And air quality all over the country, right, is taking a hit as a result of that. So I think we're seeing that having such a high density of these sensors on top of those EPA monitors is already benefiting people this year. And as you say, with climate change drying out forests, raising temperatures, and fueling more of these explosive wildfires, that need is not likely to go away.
That was Laura Bliss from Bloomberg City Lab speaking with our Quick Takes. Matt Albani will be following the fires through the weekend. And that does it for this edition of Bloomberg Technology. Don't forget, you can catch my fascinating conversation with Ethereum creator Vitalik Buterin on Bloomberg Studio 1.0 throughout the weekend here on Bloomberg TV. You can also check out the podcast. But stay with Bloomberg Now for Wall Street Week. My colleague David Weston will be